welcome to the U.S. Black Chambers Inc. live watching session with Access to Capital. We are here with Lendistry, and on behalf of our president, Ron Busby Sr., our board, our chambers, and our staff, I want to thank you for attending with us today. I'm Philip W. Dunn, Program Manager with U.S. Black Chambers Inc., affectionately known as the global voice of Black businesses, and we represent close to 170 Black chambers of commerce across the United States and Canada, and small businesses across the nation. And we are founded on 5 pillars of service: advocacy, access to capital, which is why you're here today, contracting, entrepreneurial training, and chamber development. We're going to move to the next slide here. And what we intend to do is provide under-resourced small businesses with an opportunity. We feel that you deserve a fair chance at affordable financing. And that is why U.S. Black Chambers Inc. joined forces with Lendistry to provide loans designed for small businesses within local communities. And we have you all in mind. Now, this innovative partnership is opening the doors to financing to help minority, women-owned, and veteran-owned businesses find a path to receive much needed financing and funding to sustain growth and to build wealth for their firms and themselves. Now, tune in to this webinar to learn more about the types of credit that your business needs in order to get the financing to go to the next level. Now, before I introduce today's speakers, I encourage you to drop your questions into the chat or into the Q&A section, and we will address as many of those as possible at the end of today's webinar. I also want you to drop your first name, last name, and business name in the chat so that we can record your attendance. Now, our panelists for today are Shawnse Hightower and Brian Cho. Shawnse Hightower is the VP and Relationship Manager at Lendistry. Shawnse has a proven track record in relationship building, successfully onboarding top-tier clients and employees for multiple financial institutions. Now, Shawnse has experience that extends beyond Lendistry, but primarily in performance management, where she implements strategies that align with organizational goals. She's passionate about providing economic opportunities and progress for small businesses. She helps with growing small businesses and helps their owners in their underserved communities. Her efforts have resulted in a more inclusive and a cohesive team. And her excellent relationship building skills and approachable demeanor, I can attest to that, make her a trusted resource for clients, borrowers, and team members seeking guidance. Now, Shawnse stays at the forefront of sales trends and best practices, ensuring that her strategies are practical and forward-thinking with a result-driven mindset. She's developed and implemented successful development programs and streamlined processes, making her an asset to any organization looking to optimize capital. Our next panelist I'd like to introduce you to today is Brian Cho. Now, Brian started with Lendistry in December of 2022 as the VP of Business Development, and he's the VP of Business Development Manager for the SBA team. Brian manages Lendistry's business development representative team, processing the small loan program for working capital from $25,000 to $500,000. Now, Brian has 10 plus years of experience processing SBA loans from sales to portfolio management. Now, without further ado, I would like to turn it over to our Lendistry team, Shawnse and Brian. Take it away.
Good morning, everyone. Thank you for having us here today, and we're not going to take up too much of your time. We're going to allow you guys to ask questions. And can we go to the next slide, Tiffany? Next slide. So about Lendistry, we are a minority-led company. Our CEO, his name is Everett Sands, and our mission is to help minorities, business owners in their communities to gain capital. Can you go to the next slide? So far we have about 10 billion in loans and grants. And so we're here today to specifically speak about our loan programs, and we've helped over 34,000 businesses, and that number has already grown to, I don't know what the number is anymore, Brian, right? Next slide, Tiffany. Next slide, Tiffany. So I just want to speak about things to consider before applying for a loan. You want to think about how much you actually need for your company. When I talk to borrowers, the first thing I ask them is, how much do you need? And you really need to be honest with yourself. Um, a realistic number. Banks are always looking for a realistic numbers that actually matches your revenue that your company is currently bringing in. The next thing you want to consider is your credit score. I know here at Lendistry, we utilize Experian. So I tell everyone whenever you get a chance to make sure that you're downloading the Experian app and just to keep up with what your credit score is. Um, the next thing you want to monitor when you're looking at your credit score, you want to see if you have any delinquent payments or any late payments, and you want to take care of those payments prior to applying for any loans, because that is a negative. When we're looking at delinquencies, we want to make sure that the borrower is able to make the loan payments. And when we see delinquencies, that means to us that you're not able to keep up with your payments. Uh, we also want to know if you have declared bankruptcy in the last 5 years. Most other banks want 7 years, but here at Lendistry, we do 5 years plus. And how long have you owned the business? In order for anyone to get a loan with Lendistry, the business has to at least be up and running for 2 years. Another thing I want to talk about is annual sales. Annual sales, and very important for you to know your revenue. This is going to help us determine if you're able to pay back our loan. Our CEO Everett, he has he has two things that he always wants everyone to know. His first thing is, hey, pay me back. And then his second rule is to not forget rule number one, to pay me back. So his two rules: number one, pay me back. The number two rule is don't forget rule number one. So revenue is very important for your company. Has your business been profitable for the last 2 of the 3 years? And this means to us is we typically ask for 2 to 3 years tax returns. And if the business hasn't been profitable for 1 year, we look at the third year tax return, if that makes sense, because we actually try to get people approved for loans. So we do have loopholes here at Lendistry, which is always a plus. And one thing we like to do is to play in the gray. So every file that we work, every loan that we work on is totally different. What is your estimate net worth? And it's just going back to us wanting to know if the borrower is going to be able to pay us back. What state are you located in? The reason why we ask what state you're located in is because we participate in SSBCI, which is basically a state guarantee program. And the last question is basically, how old are you? In order to get approved for a loan here at Lendistry, you need to at least be 18 years of age. Next slide, Tiffany. Alrighty, and so I'm gonna pass it on to Brian, and he's gonna go over some of our loan products, but we really want to talk about our scored program. I'm going to pause too to see if anybody has any questions.
Thank you so much for that, Shawnce. There is a question. If you do get your credit report, you see some delinquencies on your business credit report, and you address those delinquencies, how long does it take for it to fall off the credit report, or does it fall off the credit report? What happens?
So it typically it won't fall off your credit report because it's always going to have that ding on there. But for us, it's going to show that you're current and you don't, it's a zero balance. So we like to see zero balance, if that makes sense. And then Brian, if you want to add to this question, because you're the guru here.
Yeah, good afternoon. So typically the credit bureaus, they all have their own refresh cycle. And so, yeah, customers will be like, hey, I paid off this debt or I paid it down. Like, please, rerun my credit report. Oftentimes the numbers will come back exactly the same because the bureau itself hasn't refreshed. So we typically tell customers any sort of activity, try and give it at least a 21 to 30 day grace period for the credit report to update, and then we can repull or revisit the report.
And so I found a loophole to that because I actually did it myself. I paid down one of my credit cards and it didn't reflect on my credit report. So I called, or I actually went online to submit a dispute. And so typically they look at a dispute within 72 hours. And then if it's legit, they'll update your credit report. So that's a loophole. Submit a discrepancy or submit a dispute, and they'll go ahead and adjust the credit report. That's a loophole.
Awesome. Thank you. Thank you both for those responses. We do have another question that came in from one of our business owners from Citizen Financial Center, and they have a question: what debt to income ratio should I ideally have in order to get approved for a loan?
That is a tough, not tough. It depends on the program you're trying to get into, and it depends on the loan amount. Ideally, all of our loans go through a cash flow analysis of some sort, right? Whether it's what we're calling a payment to revenue. So basically, we don't want your monthly debt to exceed 25% of your monthly gross income. So that's a 25% debt to income ratio for our scored program. For our traditional 7A or non-SBA loans with the full underwriting, we're just looking to see a 1.15 debt coverage ratio. Basically, for every dollar of debt you're generating, a dollar, like I believe it's a $2.15 in gross revenue. So it just depends on the loan product that you're applying for. At the end of the day, it comes down to a cash flow basis, cash flow analysis, incorporating all business debts.
So I'm going to go back to when I said, know how much money you need, realistic amount, because it really matters at the end of the day. Because don't come and ask us for $1 million and your revenue, the revenue is not revenuing. That means to us that you're not able to afford $1 million loan payment. And sometimes when we notice that a borrower is not eligible for, let's say, $1 million, we'll say, hey, you are eligible for 250. So we do things like that here at Lendistry.
That's awesome. And then back to the credit report. How often should I monitor my credit report? Is this something I need to be doing weekly, monthly, quarterly, annually?
So me, I have the app on my phone. So anything that happens to my credit report, I get notifications. So I would say it's best to, if you're able to download the app to keep up with it that way, because they do send out notifications. And with all of the new fraud that's going on, you're able to lock your credit just within seconds. So
Awesome. Thank you. Thank you both. And I know that, we've got a lot more to cover. There are some questions about interest rates, et cetera. Some of that might be covered down the road.
yeah, so Brian is going to jump into his session. Go ahead, Brian, take it away.
All right. So here at Lendistry, we have a variety of loan products available to the small business community. Basically, it's delineated within into two categories, right? It's either an SBA product or non-SBA product. So the first one, that traditional term loan, it's a non-SBA conventional commercial loan. Will go up to, looks like up to $5 million. It'll be amortized over 5 years. So it's like your traditional, bank loan for your small business, for a variety of needs, whether it's business acquisitions, working capital, leasehold improvements, tenant improvements, real estate purchase, investment real estate purchase, what have you. It's kind of a blanket loan product. And then we have a non-revolving line of credit. I believe it's a non-SBA product. It's specifically targeting contracts or contract financing, people who are trying to bid on projects and get their projects going, and then the repayment of those projects will pay down the loan itself. Another non-SBA loan product would be our airport concessions, and then the contractor purchase finance. These are specific products aiming for specific industries. So again, like anything contract related, construction related, and then anything related to the airport concessions. My I guess area of expertise would be in the 7A or the SBA 7A world. We have a general product, which is the 7A loan. It'll go up to $5 million per individual borrower or guarantor, and it can be used again for a variety of purposes: working capital, tenant improvements, renovations, business acquisitions, equipment purchase, real estate purchase, what have you. It's amortized fully over 25 years. It's the kind of bread and butter of the SBA, the bread and butter of the SBA loan program. It's the most sought after and used program nationwide. And then what I specifically work in is in the small business small loan program. So I do the 25 to 500,000 working capital loans. We try to get in and out as quickly as possible. We're averaging roughly 21 days, 22 days from the time an application hits my desk until we go to funding. I work with a team of analysts who process all the loans. And just to give you some stats, we just hit our $21 million funded month for the first time, and we funded over 110 loans. We still got a few more days left for the month, but in light of that, we received over 8,000 applications just for the month of August. And so you can kind of see where we're at. We're getting a lot of applications through our door, but we're only able to process a small percentage of that for a variety of reasons. And that's something that myself and the executive leadership are looking at, is trying to increase our pull-through rate from application creations to getting loans assigned for review. So what I can speak to is for those customers, clients, small businesses that are looking to apply for a small working capital loan, is to just be prepared, right? So we talked about checking your credit scores, and we want to be above 680. The other thing is we want to be in business for over 24 months, like operationally. And we want to make sure that we don't have excessive business debts, that we're going out getting more loans to try and cover those debts. And we're just kind of in this vicious cycle of just not really making money. We're just paying off debts as we make money. So these are some of the things that we try to educate customers and clients on. Another thing we do is be prepared with your documents: 3 years business tax returns, 1 year personal tax return, any and all business licenses related to your industry or business. And if you have additional businesses in your portfolio, be prepared with those documents and explanations as well. We want to make sure that there's no outstanding tax liens, judgments that are unpaid. So they either need to be terminated, cleared, or in repayment status. And again, like from the personal side, yeah, credit score 680, we want to make sure, hey, any BKs, charge-offs have been, over 5 years. We will work with, delinquent payments. We understand, like, some people go through some hardships. They changed bank accounts, and so maybe the ACH didn't go out automatically. If there's an explanation and it's reasonable, we'll work with it. But if we see continuous derogatory behavior, so to speak, then it's a testament to that individual's character and repayment capabilities, and it's something that we do consider as a red flag, and we kind of do additional due diligence for that matter. But our like Chauncey was saying, our mission, our goal is to support the small business community at large, specifically the minority small loan businesses, small businesses owned. And for us to have, pushed out over $100 million in SBA funding this year alone, is a testament to just everybody here trying to achieve that mission that we have here at Lendistry. And there's only bigger and better things to come in the future.
That was great. So, Brian, you skipped over the most important thing about the SCORE program. So, with the SCORE program, anything 150,000 below, with the minimal being 25K, we don't look at what is it, Brian? We're not looking at cash flow, right?
We look at cash flow. We just do a different version of the cash flow. So up to 150, we just want to make sure that your DTI, business debt to income ratio, is less than 25%. Right. So for example, if your gross income, monthly income, is $10,000, based on the latest files tax return, then we just want to make sure that you don't have any repayments over $2,500. If you're applying for a loan from 150 to 500, we just make sure that we do what's called a working capital reasonable test. We'll take your 90-day average expense and add a 20% growth ratio, and we'll justify, we'll try to justify the loan request. But as Chauncey mentioned, if we feel like we can do the loan, but the numbers just aren't working out, then we may provide a counter, or we will try and do some minimal exceptions and find some other route of least resistance to try and get the funds to the customer.
Perfect. And then I just want to talk about the contractor financing program. So most times when someone bids on a contract and they win the bid, a lot of times you need to start the project. You need to start working on the project. And sometimes you don't get paid out on that contract for 30, 60, maybe even 120 days. That's where Lendistry will come in, and we will loan you 20 to 30% of that contract, with the max being $1 million. So say if we loan you $1 million, you spend 500 of that million, and then you pay the 500 back, you can continue to utilize those funds for up to 2 years, like a revolving line of credit.
Now, Sean, say that I'd love to hear that. I do have a quick question about that. There are a number of questions that are coming into the chat for that contractor PO financing. And this is for a service-based company. If I wanted to staff up and hire more, could I use those funds for payroll purposes, working capital type purposes?
So if you're going to do an SBA loan, yes.
Perfect. Thank you. Oh, and then my next question is there a specific duration on the contracts that are required? Do you have to show that your contracts are longer than 6 months, 18 months, or something like that, or does that matter?
So the longer the contract is better, but the contract needs to at least be 6 months, and then it needs to be at least 170,000.
Okay, thank you.
And then we'll do multiple contracts too. So say if you have 10 contracts, we will do all 10.
And so the aggregate value would have to be over 170 of all 10 of those, right?
Correct.
Okay, thank you. And another question, I know that there are some folks asking about the different loan programs. I wonder if you could speak a little bit more about the line of credit.
So with the line of credit, we kind of don't have that program anymore because I know that only 2 people paid us for our line of credit. So we have it, but then we don't have that anymore. So what we did was create the contractor financing, which is kind of like a revolving line of credit, but only on contract. So we're pushing to get that one back. So bear with us. Fingers crossed.
Got it. So then I guess depending upon the performance of the contractor PO financing, you can make the case for a line of credit. Okay,
So yes, it's like a revolving line of credit.
perfect. Thank you. Thank you. And I don't see any other questions in the Q&A at the moment. I'm just going to scan the chat real quick to see if there's any additional questions coming out of the chat. I don't see any additional questions out of the chat, but shout out to a couple of our business owners, Tracy Green, Patrice Howard. I see we've got Nakira here, Ty, Tariq Delavalade, who is here. Alana Stinson. I see we have Nakima Whitfield, Alina Keith. Alina Keith asked earlier about the debt to income ratio. Definitely appreciate that. We have Janita Green.
Which was a great question.
Yes, yes. And we've got a couple of CPAs here, so definitely glad to have them here. And then I have a question here, and this is a really great question. And it says here, I am a small business and I do not have the funds to grow. Please share any recommendations that you can share. And they didn't provide any income level or anything like that, but I wonder if you could just kind of share a little bit on that.
I would say if you're able to do any grant programs will help a business to grow. And then I would say you need to connect with a scored counselor at the U.S. Chambers because they'll be able to get you headed in the right direction.
Perfect, perfect. And let's see here. I'm just double checking to make sure that we got everybody. I see Irvin out there. Tree says hello to everyone. Okay, so someone was able to use some grant money to help build some of their infrastructure, their website, etc. So that is perfect.
And a couple of bars that I came across, they utilize some of their grant money to use as a down payment for a loan. So a borrower needed about 1.2 million, and they utilized their grant money as a down payment towards those funds.
Perfect, perfect. And then I've got another question here where do you all as lenders make any distinction between a small business if they provide services or if they provide products? Is there any distinction in your lending criteria?
Yeah, I would say it again, it depends on the loan amount and the request. We for the SBA loan product specifically, we have to check the size standard based on the NAICS code of the industry. A majority, like 95% of the small businesses will qualify based on their tax returns. If not, there's an alternative size standard check that the SBA allows for, and I have yet to see a business fail to hit that size standard check. So it's whether it's services, whether it's retail, whether it's restaurants, professional services, it's all driven by the NAICS code.
Now, this prompted another great question. Does every loan program require some type of down payment? And if so, how is that down payment calculated?
No. So for our scored program, our small loan working capital program is 100% financing, including the fees. We'll include the fees in our financing. Um, if the only consideration for a down payment or a personal injection would be whenever an acquisition is involved. So typically your real estate purchase, your business acquisitions, we want to see some, borrowers have some skin in the game. The source of down payment would come from their business accounts, preferably that's been seasoned for, 2 to 3 months. But again, it's possible that if again, it could be grant money that's not repayable. If we can source those funds from a legitimate revenue, a revenue source, we can do that. Sometimes gifted funds from parents, family members, friends, within reason, we'll accept that as well. So it just depends on the type of transaction, but typically it's down payments involved when an acquisition is involved.
Okay. And then this next question comes to us. We got a couple of businesses that have joined us. I wonder if you could tell us, is there any flexibility to the payment terms in the different products? And the borrower choose their payment terms in some instances, or is it all kind of a standard set?
It's pretty set and standard. So again, in my world, that's the working capital of up to 500. We potentially offer three different loan products. We have an SBA product. We have what's called our core micro, which is just our non-SBA conventional loan. And then we, depending on the state, will offer a state guaranteed SSBCI loan. So some customers will come in and get three loan products offered to them. Some will only get one. Depends on the scores and the cash flow and just our initial analysis. And based on those products, we'll have different amortizations, loan terms, interest rates that are predetermined. Now, when it comes to real estate acquisitions, business acquisitions, things, the transactions that are larger, there is a little bit more wiggle room when working with the relationship managers, the business development officers, as far as pricing. But again, it's risk-based pricing. So, the amount of risk that Lendistry would have to assume to do this loan would determine the pricing that we're willing to offer. Um, so it just depends on the scenario that we're looking at.
Awesome, awesome. And then, you mentioned that, there are certain requirements and criteria that need to be met. You got to supply tax return information, other information. Uh, what about after the loan has been granted? Are there any additional reporting requirements? Let's just say I take on some additional debt afterwards, or even some equity financing. Are there any additional reporting requirements in the duration of the loan?
Yeah, we'll do so once we fund and book a loan, it goes into our portfolio management team, our servicing team, and they service the portfolio to make sure borrowers are making their payments annually, making sure the loan is meeting the needs of the small business. And so in doing so, they'll collect updated tax returns on an annual basis, updated licenses, permits, insurance documents, just your basic conditions as part of the loan agreement. If we see maybe a business is starting to take on a little too much debt, their revenues are dropping, then it may raise a flag internally for us as far and maybe initiate a cash flow analysis and have that conversation with the borrower. Say, hey, what's going on? We see maybe the numbers are dropping. Is there something that we can do to help you, or is it something that is it just kind of a bad year for whatever reason? Obviously, during the COVID pandemic, a lot of customers, we're seeing a lot of you know incomes drop during that time, and so pointing them to the right direction as far as getting disaster relief with the SBA at that time, PPP loans, EIDL loans. And then coming out of that, just making sure customers are surviving, given, the high cost of goods for raw materials and products, in 21, 22. And, is the business surviving? Are they making their payments? Are they just scraping by, or are they actually, doing sufficiently well, and they've pivoted their business model to be somewhat profitable, right? So these are things that are taken into consideration after the fact, but it's typically on a annual basis or a biannual basis.
I wanted to kind of piggyback off of that since you mentioned PPP loans. I want everybody to know that you cannot be in default with any PPP loans because that's basically SBA. So you want to handle that before you try to apply for a new loan.
Thank you both for that. And just a couple more questions here, and then we'll start to wrap things up. Can either one of these products or an SBA loan help to purchase franchise or be used to purchase a franchise? And if so, please describe the criteria associated or restrictions associated with that.
For franchises, yes, we can do it with an SBA loan. Although the SBA got rid of the franchise directory, we prefer to see a franchise having been established for at least, last I remember, I believe it was 5 years, but I think there's some flexibility with that. We're going to want to see experience in the industry from the applicants themselves. The franchises that we typically cannot finance are the ones that impose too much control over the franchisee. The number one example would be 7-Eleven. 7-Eleven does all of their financing. They control the pricing. They control the inventory for all their franchisees. You literally just pay your money to 7-Eleven. They set up the store. Then you just operate it. You manage it for them as an owner operator. Another one historically was Curves, which used to be a women's only gym, which is now, I believe, co-ed, so it makes them SBA eligible, but previously they did not allow men. And so if there's any patronage restrictions, that made them franchise ineligible. So those are typically the top two reasons why a franchise will not be an eligible model.
And then earlier we touched on SSBCI opportunities and depending on, I guess it's all dependent upon the state that you're in. And funding from SSBCI programs be combined with funding from Lendistry?
I'm sorry, what was the question again?
Can the funds that I receive from a SBCI program, does that interfere with any funding that I get from, say, Lendistry product?
So the SSBCI is funded through Lendistry, same as the SBA loan, right? We have delegated authority, or with some of the states, and other states we have to go through their approval process. So we would be financing on their behalf. And if the states are offering Lendistry a guarantee for doing these loans based on their criteria, their demographics, because again, the purpose of it is to try and hit the not necessarily the minority community, but the low income communities of the region. Yes.
Awesome. And then the last couple of questions I have here, well, I'll say this one question here for last. It's about success stories that you all might have seen through some of the products that you've offered. But if we can go back to, I know that Shansay mentioned a couple of tips for credit repair and improvement. What other tips do you all recommend when it comes to improving one's credit and repairing past delinquencies?
So I'll say connect with US Chambers. They have counselors waiting And then I would say, just download the Experian app, and you're able to look at all 3 credit bureaus, and just anything that you see on there that's delinquent, you just pay it. Just pay anything that's delinquent, get caught up on anything that you possibly can, and stay away from MCAs, merchant cash advances, because once you start getting those, it just sends you down a rabbit hole.
Got it. So that's like the third party point of sales offering, hey, take this $10,000 and pay it back through your sales over the next couple of months or so, right?
And the interest rates accrue, I think it's every day. So that's not good.
Right.
And if you currently have some, you might want to refinance that debt.
Perfect. Thank you for that. And then the last question that we have here is about success stories. Now, you guys shared a great bit of statistics and KPIs in which you all have achieved in processing your loans. Can you share some of those bright spots where a small business has gone from, maybe good to great from, their borrowing with Lendistry?
So we can't disclose any of the names or anything like that, but I can tell you that I've spoken with a couple of borrowers who were able to make payroll for the employees. Something happened where maybe they needed to replace some equipment, and it's like, replace this equipment that's an arm and a leg, or pay my employees. So they were like, let me just reach out to Lendistry to get my payroll available, some funds, so I can make sure that my employees get paid, because some business owners consider their employees to be family members as well. So, and then I know that we did a $22 million deal, and that was for a shopping center, and they were able to provide jobs to the community.
Yeah, I can second what Shante was saying. We don't always hear how Lendistry impacts the small business community. But we do hear some stories here and there where again they've met payroll. I've got a loan right now on my desk where customer he got a loan earlier this year for working capital, and then he received a huge purchase order with Walmart to distribute his products at Walmart, and he's like, hey, I need more money. It's some of these businesses, their growth is almost instantaneous based on the opportunities provided, and so we do our best to try and meet their needs and get them better situated for themselves. We've had some people that, well, I think we had one deal where they got kicked out of their building, and for the last 2 years they've just been kind of doing pop-ups here and there, and then they finally got into a space, needed some money for renovations to get back on their feet in terms of just stabilizing their business operation. So there's a lot of different stories out there, a lot of different needs and purposes. um, I can't say we satisfy 100% of our customers and applicants, but we do our best, right? We still have to make sure our portfolio is clean and it makes sense, and we're not just giving money out to anybody and everybody out there. But we've definitely helped a lot of people over the years, starting with the PPP and idle loan processing being over $8 billion, to now offering business loans, working capital loans, and exceeding that 10 billion mark, I think, earlier this year. So we're just doing more and more better things for the community out there.
And see, that's awesome to hear. I'm glad that you all were able to share some of that so that we can really tie it to some of our businesses that are on the line today, and hopefully help them understand how, maybe they don't need the funding, but they'd like to do some renovations, or maybe they'd like to uh, hire an employee. There are opportunities available for them. And one of the things my colleague Tiffany Mays, who's on the line, she talks about the unique partnership between Lendistry and USBC, and how it enables our members in particular to utilize this partnership that we also have with SCORE, who are trying to get approved. So folks can actually go and before they apply, go and talk to some of our SCORE mentors, or even go ahead and go through the application process. But the resources are here for our small businesses to take advantage of. And so to also hear the success stories that you all have shared, I think is very positive for our businesses. So definitely, if you need it, it's here, and we encourage you all to take advantage. So anything else that we need to maybe talk about? There is another question that just popped up right as I was talking, and it talks about this is from Natalie Jerome, and her question is: are the lending options only for U.S. based businesses? Can it be used for a U.S. registered business that wants to establish a location abroad?
Um, yes, the business must be based here in the United States because that is our asset. We're filing UCC liens against the business itself and whatever assets we may be financing, and they must be US based. Now, if they're doing exports, it's a different story, but but again, we won't be financing businesses that are established and operating overseas. Um, in particular, the SBA, it's a U.S. federal loan program, and so they specifically, they specifically say that we have to finance a U.S. based business only.
Awesome, awesome. Definitely appreciate that response. Definitely appreciate the question coming through the chat. Now, we have just a couple of minutes, but I want to thank both Shawnse and Brian for sharing their expertise with us today. And I know we have a couple more slides that we want to get through. And before I close this out, Brian, Shawnse, are there any other thoughts that you all want to share before we move forward?
I want to say the higher the credit score, the better chances that you will be approved. We have products where the credit score requirement is a 640, but the higher your credit score, the higher chances you are to get approved.
Thank you. Thank you. And Brian?
Um, I would say don't be discouraged if it doesn't work out, right? Obviously, we would love to help anyone and everyone out there, but sometimes there's a better time and a better place, and to not be discouraged, but to take the opportunity to try and better the situation, whether it's your personal FICO score, whether it's repaying down or repaying some of your business debts, and just better positioning your financials. And quite honestly, sometimes it just means having to bite the bullet and file your tax returns correctly, right? I know we all want to save some money on taxes, but sometimes we have to show the correct story in order to qualify for the following year. So just depends on the situation that people are in. We literally just take the documents that we receive, and so sometimes it's not a no, but not now, maybe tomorrow. Yeah, it's
Mhm.
type of situation. So just don't be discouraged.
So I did put my email address in the chat. So if anyone feels like they want to reach out to me, it is fine. Reach out to me and I'll set up some time for us to meet. And then the US Chamber has a personalized link for you guys if you're ready to get started with the application process.
Awesome. Awesome. Thank you both, Brian, Shawnse, for sharing your expertise with us, for taking the time out and really walking us through this partnership and the products that you all have to offer. We definitely appreciate it. And thank you for sharing your contact information. There is a question in the chat. We will be given access to this tech. We will be sending out the recording of this session to each of you that were in attendance. So you'll get a chance to review it, and then also we'll share information on the link to Lendistry, so you'll get a chance to access that as well to learn more, and you'll get a chance to see some of the information that was shared with you here today. But it was our hope that today's event on access to capital was beneficial to you. And we hope that it was going to be something that's beneficial for your business. So if you have any questions for USBC, please feel free to email us at programs@usblackchambers.org. Now, up next, I want to talk about some of our upcoming events, and I'm going to turn you loose for the day. We do have a number of events that we have at US Black Chambers Inc. Next month, we're going to have a ton of programming, about 14 to 15 webinars that we're going to be sharing. Some of our in-person events are going to be listed there as well. So I encourage you all to visit usblackchambers.org/webinars to register for topics such as back to business, marketing that drives revenue. That's taking place tomorrow at 11 a.m. Eastern Standard Time. And then we have Breaking Barriers, Transforming Customer Service for Black-Owned Businesses, taking place on September 10th. This was an event that we also did this month, which talked about customer service. We know that minority-owned businesses are looking for every advantage in order to attract and keep customers. So this was a really good webinar for you all to attend. And then, of course, we have our Buy Black informational webinar that's taking place on September the 18th. So we encourage you all to take a look at these webinar options. And I mentioned we will have probably about 15 to 16 points of programming for you all next month. Now, on this slide, we want to talk about Buy Black. Now, this is the only certification program for Black-owned businesses with a business directory, providing businesses that certify access to private and public procurement opportunities. And I actually have one on my desk today for companies that produce aircraft parts. So if you are a company that produces aircraft parts or work in aircraft services, please send me a note at programs@US Black Chambers. But this Buy Black platform helps to highlight Black-owned businesses, and it provides you with other benefits as well. So this online program, it can help prepare you for the contracting space, where, of course, you'll need some additional funding, and you can go to Lendistry. But definitely take a look at the Buy Black platform if you haven't already. Be sure to get started on the certification process today by visiting usblackchambers.org/certification. Now, this next slide is going to talk about SCORE. And Shawnse mentioned the SCORE program today, and we recognize that there are times that your business is going to need some assistance. And so USBC decided to partner with SCORE in order to help you guys get the answers that you need to your questions quickly. And what we found is that there's some research that tells us that small business owners who receive 3 or more hours of mentoring, they report a higher instance of revenues and increased growth. So we definitely encourage you to take advantage of these opportunities. So SCORE Mentoring is a free service offered to businesses served by US Black Chambers. And SCORE mentors, they will meet with you one-on-one, virtually or in person, depending upon where you are, in order to support your success by providing experienced advice. They also provide top-notch consultation. They share information on best practices, and they provide education on various small business topics. So definitely encourage you all to follow up with us on that SCORE. Just use that QR code that you see there on the screen. Now, in this last slide here, I think it's our last slide, but this one talks about our Verizon Small Business Digital Ready program. We found that you can unlock the potential of your small businesses with this program. The VSBDR program is what we call it. It's a complimentary program due to our partnership with Verizon. You get a chance to access some very critical resources, some different tools, and some expert guidance that's just for small businesses. So whether you're looking to master online marketing or improve financial management, which is going to be key in order to get the capital or the lending that you need at the rates that you need and the terms that you need, or just to tackle other challenges, you'll find everything that you need in order to excel in the digital age. So you'll get a chance to elevate all of your skills, connect with fellow entrepreneurs, and get personalized coaching that's going to help you to reach your goals. So we encourage you to seize this invaluable opportunity to grow and to thrive. So I encourage you all to click that QR code or scan that QR code and enroll today. And let's get started in taking those businesses to new heights with the Verizon Small Business Digital Ready. So definitely take a look at that. And then this last slide, it talks about our resource desk. Actually, can we go back to the Verizon Small Business Digital Ready? Because there was a question about grant funding. Periodically, Verizon Small Business Digital Ready issues grant funding. And as soon as we hear about it, we tell our small businesses to apply. So I encourage you all to get involved in the platform so that once we get the word, we can start to reach out to you all that the grant funding opportunities are available. So definitely go out there to the platform and let's get as many of our businesses the grant funding that they need so that they can take advantage of the lending opportunities that Lendistry has down the road. All right, so now in this next slide, sorry about that. We do have a resource desk. This is going to be a critical one-stop shop for all of our businesses. It contains innovative, cutting-edge resources that we put together. It has some services offered by USBC as well. Technical assistance through some of our local chambers. You get a chance to participate in that. We touched on the loan program or the lending program that we have. We have some corporate and some government programs that will be used to help sustain your business. Business counseling, accounting services. I know we got some CPAs on the line that also do accounting services, but this is going to be free resources to you all. Referral networks, certification programs, supplier diversity opportunities, matchmaking opportunities, on-demand webinars. You get a chance to watch those. All of that is going to be available for you. All right. And then in this last slide, I know I keep saying last slide. I encourage you all to follow us on social media at usblackchambers.org. And if this forum prompted any additional questions, any interest that you've identified, please feel free to contact us at programs@usblackchambers.org. And again, I want to, on behalf of our president, Ron Busby, our board, our staff, all of our chambers and our member businesses, thank you all for attending this Access to Capital webinar with Lendistry. And it's made possible through the USBC partnership with Lendistry. And we thank them and we thank you for joining us today. Y'all have a great weekend and happy Labor Day to those that will be celebrating and observing. Y'all have a great one. Thank you.